and welcome to Morning Trade with Moneycontrol in association with M-Stock by Mirae Asset. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries during the course of the show. So please keep commenting on our live feed and we'll have it addressed by our guests on the show. But before bringing them on board, let's see what the global handover looks like. It's largely a sea of red once again. European stocks retreated further on Tuesday amid fears that central banks will be forced into aggressive monetary policy tightening. On Wall Street, the S&P 500 suffered a 5-day losing streak on Tuesday, dipping deeper into bear market territory. Dow slid about 150 points, also falling for a fifth straight day. Nasdaq, however, bucked the trend and settled marginally higher. Meanwhile, Asia-Pacific stocks mixed as China's retail sales, industrial production data beat expectations. And the SGX Nifty indicates a flattish start for the Indian stock market. All right, let's get Kunal Shah of LKP Securities on board to talk technicals. Good morning, Kunal. Thanks for joining in. A lot of volatility being witnessed, a lot of bearish trends being seen across different indices, different markets, not only locally but globally as well. What is it that you predict for the Indian benchmark indices? Could there be more leg down from the current levels of 15,700 levels, or do you see some relief coming by?
Good morning, Karunya. I think if I talk about the markets on the global front as well, we have seen a carnage of selling that has been happening since the past 1 to 2 months. The trend on the Nifty is clearly on the downside, where we are having a lower high, lower low formations, which is still intact. One positive thing, we are surrounded by a lot of negative news, whether it's inflation, whether it's the geopolitical tension. One thing on the FI data, what I would like to highlight is currently the FI data for the long short positions, which is currently trading at 88%. That means they have 88 to 90% short positions and only 10 to 12% long positions which are there. Now, this indicates that we are in an extreme oversold territory. This data had come in when the March 2020 COVID crash had happened. That was the time when we had seen such kind of data. So definitely we are in an oversold territory and aggressive selling has been done by the FIIs. Again, the FOMC meet, that is an event which is likely to give us a clear picture on the market going ahead. So currently the trend is down. For me, Nifty on the downside, 15,400, 15,300 is a support zone, which I'm expecting it to test on the lower end in this volatility. And also the India VIX, which is still in an uptrend, that is where the volatility is going to be there. So for the current week, if I talk about, I think expect a gap up, gap down, and even intraday swings of 100, 200 points, which would be there in the Nifty index. The trend still remains on the bearish side. On the upside, for the trend to resume, it has to cross about 16,400. That is where we will see a reversal, which will be coming in the Nifty index, where we can see further upside. So broadly, if I talk about 16,400 is my resistance and 15,300 is my support on the downside.
Okay. But, a lot of stocks are witnessing good volumes, good interest as well. So are there any pockets in the market or any kind of stocks that our traders and our viewers can keep on their watch list, specifically in the next couple of days, perhaps this week or the next?
See, if I talk about a stock-specific approach, what we are having, as I said, we have to be very selective. The volatility is going to be there. There are certain sectors and there are certain specific stocks where we can see the buying momentum still continuing. So one stock which was there on my radar is Apollo Hospital. So Apollo Hospital had seen a massive sell-off in the recent past 1 to 2 months. And after that, the stock has been trying to gain some momentum after this sell-off. So that is where the buying attraction, what I'm seeing. So Apollo Hospital yesterday crossed its previous 5 to 6 days high. Again, there were some rising volumes which are there, which indicate positive momentum. I'm expecting the stock to go towards the levels of 3,800 to 3,860 on the upside. Currently, it is trading around 3,700. So I think it's a good opportunity to buy. You're getting a stock almost 30% discount from the current levels, and the base formation has already been formed. So Apollo Hospital can see some good upside and it would be a safe bet in the current scenario where the risk reward is very much favorable, where 3,600 is my support and 3,800 to 3,860 is the levels which I see on the upside. The second stock which is there on my radar is from the power sector. of lately, power as a sector has been doing quite well. And there is momentum which is there on the buy side, where we have seen a massive sell-off in the markets. Power as a sector has been quite stable. So that is where once the market stabilizes, that is where again the momentum will be back and they will be the leaders going forward. So I think power from the sector, my pick would be Torrent Power. Torrent Power again after a very good sell-off has seen some base formation which is happening at the lower levels. So Torrent Power is currently has formed a triangle formation, what we call in technical patterns. So a triangle pattern formation is intact over here on Torrent Power, and I can see upside coming from the current levels as well. Again, yesterday the stock was up by 3% in this volatile market, which clearly indicates the strength in the stock, where currently it is trading at 470 levels. I am expecting the stock to go towards 490, 500 zone. The lower end base for the stock is around 450. So as long as it holds the levels of 450, my view will be bullish, and I'm expecting levels of 490 to 500 on the upside for Torrent Power.
Okay, all right. What about the weekly expiry? Because there's a fair amount of uncertainty still. Today is going to be an important day from the FOMC commentary standpoint. So how does the weekly expiry look? Because that's going to happen tomorrow. So what kind of an action do you foresee in the next one today and tomorrow?
So I think if I talk about the weekly expiry, as I said, volatility is definitely going to be there. Thursday, we might have a gap up, gap down post the announcement on Wednesday night. So I think till now, what the data suggests is on the Nifty front, 16,000 call is the strike where the highest open interest is built up on the call side. So that is going to act as a resistance for me. On the downside, the put writers are trying to defend at 15,500 zone. So I think this is a 500-point range in which Nifty is stuck in. Either side we break, we are going to get some swift momentum on the upside or on the downside once the range is taken out. So my sense is that 15,500 and 16,000 levels will be held. This range will be held till the time the FOMC meet is announced. And once the outcome is there, you might see a breakout on either side and then trending moves would come in.
Okay, lots of stock-specific questions also coming your way, Kunal. Subramaniam has written to us. He is asking if he can enter Jubilant Food at the current price for the long haul. I think, the stock saw some meaningful upside action towards the end of May, and post that jump up, last 2-3 weeks have been largely range bound. But of course, Subramaniam is here to stay for the long haul in this counter and wants to know if the current level is a good one to enter.
See, I think overall, if I talk about the FMCG as a pack, because of the inflation concern, what we are having currently globally, not only in India, we have seen some selling pressure from the entire FMCG pack. And Jubilant Food has also seen a significant downside from the levels of 900 to currently trading at 500 levels. So almost the stock has almost half from the all-time high. So I think from the current levels, the stock is forming a base at the lower end, where the support on the downside remains around the zone of 480, 500 levels. I am expecting the stock to go on the upside because the setup has been on the bullish side, where we have seen some good buying momentum in the last 1 to 2 weeks. The stock is now consolidating. Ideal level on the upside to go long will be above 535. So I think if he's holding the positions, I will recommend him to hold the positions. Keep a stop loss on the downside of 500 to 490. If that zone is breached, then we might see further sell-off coming in. Till the time these levels are held, I'm bullish on the stock, where I can expect the stock to touch the levels of 580 to 600 on the upside.
Okay, all right. What about Polycab India? We have a query coming in for that as well. Narendra Pandey has asked Polycab view for the long term. This one also last 1 month, or even if we look at the last 3-month pattern, largely a range-bound trade. Do you think it's a good idea to buy into it at the current level?
See, I think if I look at the chart of Polycab India, the stock has been in a sideways consolidation. And yesterday, the stock has given me a breakdown as well with volumes and with fresh short built-up positions. So my view is bearish on the stock from the current levels. We can see further downside coming in Polycab India as well. Probably a more 5 to 6% decline that could come in. So not an ideal level to buy Polycab India. Probably if I get at lower levels, I would try to accumulate for a longer term perspective. But from the current levels, I'm expecting still 5 to 6% downside, which could easily come in since the stock has given me a technical breakdown and with fresh open interest built up on the short side as well. So my sense is that the bearishness is likely to continue on the lower end, and we can test the levels of 1800 to 1850 on the downside.
Okay, all right. Kunal, request you to stay on hold. We'll get back to you with more stock-specific questions. Let's take it across to Rahul Arora, the CEO of Nirmal Bang, to talk about the fundamentals of the market and how the bigger trends are playing out. Rahul, thank you for taking time out and joining us this morning. The big question that everybody is asking right now, I'm sure you've also got it from a lot of sources, is that whether investors should stay put right now or should they lap up shares and use this kind of dip in the market as an opportunity for the long haul?
Morning, Karunya. Thank you for having me on your show. So I think the way to look at it is, we're close to a 20% retracement from the highs that the Nifty has made at 18,600. That level is somewhere around 15,000. My personal sense is that the data points are known to us, Karunya. I think, the war is on, crude is at 120, global central banks are raising interest rates. I think a lot of this news flow is a lag news flow. I think for incrementally the markets to make a substantial correction from here, I think the data points need to incrementally worsen from here. It's very possible that on the current data points, the Nifty sort of remains in a short-term range of about 15.5 to about 17,000 for the next 3 or 4 months. But sometimes these markets that go sideways give you very good opportunities to enter. So my suggestion would be, I think if you look at a lot of the new generation stocks, right, which have listed over the last 18 months, they've come down to anywhere between a third to a fifth of their value. And a lot of the old generation high quality names are down 50, 60%. This is actually not a bad time to be buying because, nobody can time the market, Karunya. So even if it falls down another 5% and you can average your way down, I think eventually you will end up making a lot of money. So I think the bulk of the pain is probably out of the system. I wouldn't, be absolutely sure on where it will stop, but I do think that we're entering into a good accumulation zone for stocks.
Okay, all right. But what are the pockets that you see value in right now after the significant correction across different sectors and the overall breadth of the market that we've seen? Any value buys, any sectors or themes that you like? New Age, you were mentioning that they've clearly seen a phenomenal beating in the last few months. But anything that has caught your attention?
So I think, Karunya, anything that has underperformed on price and time would be of interest to me right now. And I think, if you're likely to have a good monsoon and the run up to the general elections after the monsoon will just about be 18 months. So I think the government spending as we move closer to 2024 will obviously pick up in a material way. So I think there is a strong case for bank credit growth to pick up from here. So I think the bank Nifty itself has underperformed both on price and on time. I think that could be one place where you could look at leaders, names like ICICI Bank, HDFC Bank, Axis Bank. They're well known, State Bank of India. I mean, these are by and large consensus calls, but I think that could be one theme. Insurance is another, I think, from the BFSI space that has corrected both on price and time. So your viewers could look at names like SBI Life, Max Life Insurance as a couple of cases in point. And I think, Karunya, there's a good chance that the rural theme re-emerges. I don't know exactly when, but if the monsoon plays out, it may well happen in the next 3 or 4 months. So I think the CV cycle, the tractor cycle may continue to extend their up move. And an indirect beneficiary of this could be FMCG. So I would still look at names like, say, an Ashok Leyland or an M&M, or even say something like a Lever or a Britannia on this price. So I think banks, anything to do with infra spending, insurance and consumer, I think these could be 4 pockets of the market that may actually lead between now and FY24, or at least till the general elections of 2024.
All right. Thank you so much for flagging those off. Just want to ask you, you were talking about, earlier on in the conversation that the data points have to be quite weak or quite poor for markets now to correct meaningfully. But let's talk about the big downside risks. Anything that you want to flag off to our viewers and to retail investors specifically that they should be monitoring from here on?
So I think, Karunya, there are a couple of things. One is, of course, if crude resumes its upward journey and probably heads up to about 140, 150, that has a very significant economic impact for India, both on the deficit level as well as on the currency level, given that we're a net importer of oil. And then, of course, there's a margin impact, sort of a second order and a third order impact in terms of corporate earnings that comes through. So I think that is probably the single biggest risk to our market right now is crude heading up in a material way, because what that essentially means is that if you look at what the Reserve Bank of India governor said a few days back, his projection for inflation between Q1 and Q4 is actually coming down by 170 basis points. But if crude manages to stay where it is or goes higher, I think those projections will need to be reworked. So you might get into a situation where interest rate hikes are a little more protracted than the market is anticipating right now. And then, of course, you get into a situation where the yields rise and the equity market valuations take a bit of a backseat. So I think the second biggest risk for me right now is crude and the resultant impact it would have on the deficits, on the currency, on the yield, and therefore on the equity market valuations. That notwithstanding, like I said at the opening, I think it's not a bad zone to be entering, ceteris paribus, assuming nothing deteriorates substantially from here.
And finally, what is your expectation from the FOMC meet outcome today? What kind of commentary or the quantum of rate hike are you sort of factoring in?
So I think consensus is about 50 to 75. I think we're no different at our house. I think we're probably anticipating that. And I think to some extent, the Dow reaction or the build up to this event has probably told you that a large part of that is factored into both their yields as well as the equity market. So I think what would be more of interest, Karunya, would be what is the commentary from here on. I'm not too fussed about what they will do today, because I think pretty much everyone knows that it is probably going to be 50 or 75. But incrementally, if the commentary is getting less hawkish, I don't think they're going to get anywhere close to dovish. But I think if incrementally the commentary gets less hawkish, I think the equity markets will take that kindly.
All right. Okay, then. Thank you so much, Rahul, for joining in and for highlighting some key points to sort of keep on your watch list, and for our investors and viewers as well who are watching this. The key themes that are playing out, the big FOMC meet that all eyes are on, and how the commentary will play out will be extremely important. So, okay, let's turn back to technicals. Kunal Shah is here with us. Kunal, lots of questions have trickled in while you were away. Delta Corp is another stock that we would like to know your view on. Niladri Debroy is asking if it's a good time to invest, because according to his assessment, the stock has finally stopped going down in terms of stock price.
Yeah, I think overall, if I look at the chart, I think it's in a clear-cut downtrend. The stock has been one of the underperformer when the fall had happened. From 330, the stock has already come down to 180. So I think for an investment perspective, I would not suggest to go and buy at the current levels. But yes, for a trading perspective, it looks very attractive. So if someone is a trader, we have seen massive sell-off in the stock. And yesterday, the stock has formed an inverted hammer on the lower end. So I think that is a good formation which is there. On the higher end, once the stock crosses above yesterday's high, which is the level of somewhere around 190. So once 190 is taken out, I think we can see a swift momentum that could come in the stock, which could take towards the levels of 210 to 120 kind of a zone. So for a trader, I think definitely yes, but for an investment perspective, I would still not recommend to buy at the current levels.
Okay, all right. Let's move on and talk about ITC. This has been, a big talking point for many weeks and months now. It has been a clear outperformer amid all the market uncertainty and all the volatility and weak macros that we've been tackling. What is your view from the current levels now that the stock has seen a good run up in the past couple of months?
Karunya, that's what this has been a street favorite. You can say whenever we talk about the stock markets, ITC is one stock which is always there on everyone's radar. Now, the interesting note point over here is that where we have seen the inflation concern being there, where FMCG has been seen some selling pressure from the higher levels, ITC has been given a completely opposite view. This clearly indicates that the price action is already pricing in that something big is going to happen even going forward for ITC. The risk to reward ratio from the current levels is also very favorable. I'm structurally very bullish on ITC. When the FMCG, when the inflation concerns will go out of the picture, when things will stabilize, it will be the FMCG pack which will be coming back, and ITC will be one of the outperformers as well. So I think ITC definitely remains in a buy trajectory from the current levels. 250, 255 is a clear-cut support zone for the stock, and I'm expecting the stock to test the all-time high levels as well. So 300, 320 levels are easily possible, and even for positionally, if somebody wants to hold for a long-term perspective, I think the stock can really outperform the markets going forward. So I'm very bullish on ITC from the current levels.
Okay, all right. Moving on, Joseph has written to us, wants your opinion on Manappuram Finance. In the last 2 months, the stock has lost about a third of its value. So talk to us about Manappuram and which way do you see it going from here on?
See, when I look at the chart of Manappuram Finance, as we have clearly witnessed that there has been again beaten down stock in the recent correction. Now, what has happened that there are different gold players such as Muthoot Finance or an IFL Finance. These guys have been trying to take the market share, and Manappuram Finance has been struggling with its own difficulties. On the chart perspective, this is clearly visible that the stock is clearly trading in a downtrend. We can in fact expect further downside going forward as well. So it's a sell on rise kind of a situation which is there in Manappuram Finance. So I'm extremely bearish on the stock from the current levels as well. So I would avoid not to invest at the current levels. There are better stocks which are there on the gold finance theme, which could play out well. So there I would be having a positive view. But for Manappuram Finance, I'm significantly on the chart perspective, I'm quite bearish from the current levels as well.
Okay. All right. What about Dabur? Jagdish Patil has written to us and wants to know your view on Dabur. Last 2 weeks clearly have been a rough ride for the stock, but which way could it go from the current levels?
See, I think as we spoke, FMCG as a pack has been around the inflation concern. But that is where the FMCG stocks have been beaten down. If I talk specifically about Dabur, Dabur has also seen a massive correction as well. From the current levels, the stock is trading in a sideways trend on the charts. I don't see any clear picture from the current levels. 480 has been a support on the downside and 520 has been a resistance on the upside. So I think this is a 40-point range in which the stock is stuck in, and probably it might consolidate for a long time as well. So 520 above, I would say one should go aggressive long into the stock, and if it reaches the level of 480, if you have any long positions, kindly exit.
All right. Sai Reddy has written to us and he wants your view on two stocks, Tata Steel and Wipro, both heavyweights, and both clearly look attractive after the market volatility that has panned out. But do you think it's a good time to buy into either of these names?
See, I think first I'll start with Tata Steel. Metals as a sector has seen some massive correction because of the global prices which have cooled down. But Tata Steel as a company, I still think has a potential to go on the upside. From the current levels, the risk reward is very much favorable for the long side, where again a good stock which gives you close to a 5% dividend yield as well. One of the most profitable Nifty 50 companies at the current levels. So I think definitely this sell-off would be an ideal opportunity to accumulate Tata Steel from the current levels. On the upside, the stock can easily give you a return of 20 to 30% for this financial year as well. So I'm structurally very bullish on Tata Steel from the current levels. It's definitely on my buy radar, and any dip, even if you get into the stock, that would be an ideal opportunity to add into your portfolio. When I talk about Wipro, IT again as a sector has been underperforming. This is because of the Nasdaq, where we are seeing the entire pressure coming from the IT space. So for Wipro, again, the stock from 720 levels has been corrected to 445, 450 kind of a zone. The current risk to reward ratio is very much favorable on the buy side. Again, the stock is trying to form a base on the lower end. We are seeing positive divergence, which is happening on the stock on the daily chart. Again, it is there on my buy list as well. On the downside, 435, 430 is a support zone. And on the upside, I can see 480, 500 levels that could be tested in the near term. So for Wipro, even my view is bullish from the current levels.
Okay. We're also getting a query from Ashutosh and he wants your view on HCL Tech and Infosys. You've made it clear how you're assessing Wipro, but are the views similar for HCL and Infi as well?
So if I talk about HCL Tech, definitely the view remains bullish again here as well. For HCL Tech on the upside, once it crosses the levels of 1025, we can see a swift momentum on the upside towards the levels of 1050, 1060 that could easily come in. So largely my view, IT as an entire space is in an oversold territory. Again, the structure is still weak, but as a trader, I think these are the levels where we are trading in an oversold category. We can expect a pullback that could come into the IT sector. So for traders' perspective, one can definitely initiate long positions in the IT pack for a quick 5 to 10% kind of a move that we would get in once the event is over. So I'm structurally bullish on the IT pack as well, and HCL Tech, Wipro, Infosys, TCS. These are some of the counters which are looking good to add from the current levels as well.
Okay. What about Bajaj Finance? We have a query from Ratnaja Prakash and wants to know what is your assessment of this particular counter and its technicals. Last 2 months, we've seen the stock come off from 7,400, 7,500 levels. Right now, I think it's perched close to 5,400 rupees. Good level to enter? Attractive price, perhaps?
If I look at Bajaj Finance on the chart perspective, the structure is still bearish. We are having a lower high, lower low formations which are still intact over here. But given that the stock has seen massive correction from almost 8,000 levels to 5,300, I think again one of the good performing stocks which is there in the entire financial space for India. So I think for an accumulation basis, definitely one can start accumulating at the current levels. 5,300, 5,400 is a very good opportunity to initiate buy positions. Buy it in a staggered manner. You can do it as an SIP. Even if you get further fall, that would be an ideal opportunity to add the stock. On the upside, I can expect the stock to again test the levels of 6,000, 6,200 on the upside. So good upside is there from the current levels as well. So my view is bullish on Bajaj Finance.
Okay, well, there are a lot of questions coming in, guys, but unfortunately, we're running out of time, so we have to wrap it up. Kunal, it's always a pleasure chatting with you and having you on board to share your readings of the market. Thank you so much for coming in this morning. That's all we have in this edition of Morning Trade. Stay tuned. Markets with Santo and CJ is up next.